This is Matthew Cratter from Trader University, and today I want to talk about how Bitcoin is ready to explode much, much higher. We got an interesting tweet from Plan B the other day looking at monthly price points for Bitcoin. And so what he's looking at here is he's looking at how the price moves after the previous halvings. So we had the 2012 halving and the 2016. And after that, a certain number of days after that halving, we got these big monthly moves up. These are just closing prices, I believe, but we can see where the arrow is here. There's a gap right here. There's a gap right here. And we still haven't had that yet in spite of the really sharp move up in Bitcoin's price. He says, Plan B says he's still waiting for that larger monthly jump, as that usually marks the phase transition, the point of no return. This is the point at which the price of Bitcoin doesn't go back down to previous prices. It sort of reprices and sets a new trading range. If you want to track this sort of thing, there's a really a great new Twitter bot account called Halving Tracker, at Halving Tracker. And what it does is it looks at the number of days after the previous halvings and sort of compares where we are today. So we have the 2012 halving, which is the purple line right here. That was a very violent rally. We had the 2016 rally, which is the green line down here. And where we are currently, it's a little hard to see, but I'll link to this, is this little blue line right here. You can see we're just getting started in spite of the whole move. This has been sort of scaled to current prices, so we can see that the current rally started somewhere around 10,000. And if we follow along just in an average way, following the yellow line, which is sort of an average of the 2012 and 2016 moves, I believe it also uses 2020, 2021 data where it's possible. This gets us well above, we can see in all the different scenarios, gets us well above $200,000 per Bitcoin, almost up to $300,000. So that price target of $288,000 that Plan B has in his cross asset stock to flow model is definitely attainable according to this. For those people who say this cycle is going to be lower and slower than previous cycles, we can see already that that's not true. The green line here, as we said, was the 2016 bullish cycle, and that was extremely violent cycle, especially toward the end, as we got toward the end of 2017. And we can see here with the blue line that we're already tracking well above that. We're tracking above the average, and we're tracking above the 2016. So if you want to keep track of this, I would encourage you to take a look at Halving Tracker. On a scaled version, let's say we're currently at about $35,000, $36,000. If we were following the 2012 cycle exactly, we would be at $68,000 now. It's a little bit high. We can see the 2012 cycle was really, this was before Bitcoin was really well known. It was from a much lower market cap, etc. 2016 scaled, we'd only be at 14,000 right now instead of 36,000. And we're just a little bit above the average here. We're at 36, 37,000. This is the average is at 32,000. If we look at the number of days after the 2016 halving, what did it say? It said we're 251, 252 days afterwards. That would put us at March 17. So if we go back and look at a price chart of Bitcoin back then, we're basically approximately right here in terms of days after the May 2020 halving. Again, we're looking at the previous cycle. This is 2017 prices, but we can see here that even in spite of Bitcoin moving up quite sharply, almost about 100% it looks like here, the really big move is still to come in the next 9 to 12 months. Don't be deceived by all the FUD out there. A lot of people have referred me to this article. This is just a terrible article about how Tether is possibly manipulating Bitcoin, that they print up unbacked Tether that's unbacked by US dollars, and use it to manipulate the Bitcoin market. This is just simply not true. I've talked about it in a previous video. Since then, I've discovered a couple of good rebuttals. Here's a summary from Plan B of an article by BTC Economics. talking about USDT and Bitcoin. And the conclusion, tether printing does not Granger cause, this is just a statistical term, does not Granger cause Bitcoin price movement. However, it does provide evidence to show that Bitcoin price does Granger cause tether printing. And this is what we talked about previously, where after Bitcoin has a big rally, a lot more tether is printed up. The strange thing about this tether printing is you have to somehow conclude that it was used to pump Bitcoin in 2017. And then even though tether continued to grow in 2018, Bitcoin crashed. There's just no statistical evidence for tether FUD. You can go see my previous video on it. I'll also link to this this article, which is quite rigorous. I'll also link to Welly Woo's take on it about how he doesn't understand, the author of that article, that Crypto Anonymous article, doesn't understand the difference between how derivatives exchanges work and spot exchanges. I don't want to go into all these details because it really is a silly hypothesis. And if you're reluctant to buy Bitcoin because you're worried about tether printing, I would really encourage you to dig deep into this. It's unnecessary FUD. I like this tweet from Richard James. Apparently someone is printing billions of artificial unbacked dollars in an illegal scheme that is pumping the price of Bitcoin, obviously sort of alluding to USDT, US Tether, but then jokes that it's actually the Federal Reserve printing money. Obviously the Fed and central bank monetary policy is much bigger than Tether, as are the institutional flows into institutional and retail flows into Bitcoin. Right now, every single day, Grayscale, Cash App, and PayPal are buying more Bitcoin than is being mined every day. So the miners spit out some new Bitcoin every day, and more than that is being taken down and locked away in just these three institutions. Not to mention all the corporations that are adding it to their balance sheet, like MicroStrategy, as well as the new Bitcoin funds that are being set up, hedge funds, probably pension funds coming as well. So these are the real flows that are driving Bitcoin, as we know. If you're finding this video helpful, I'd encourage you to hit that subscribe button. Also hit the like button if you can. Another article people ask me to talk about is Bitcoin ownership highly concentrated. Now, concentration in itself is not a problem. It may be a moral problem or an ethical problem if you have 99% of a country's wealth owned by just a few people and 1% owned by 99% of the people. That can cause a lot of social problems. That being said, wealth has a tendency to concentrate. The more wealth you have, the more wealth you can create. That being said, Bitcoin ownership is not as concentrated as this article would lead you to believe. This is a very misleading article that has been debunked, in particular by Welly Woo again, who's becoming really a great resource here, talking about looking at Glassnode data. 13% of Bitcoin is held by the exchanges. These are things like Coinbase and Gemini, where people just choose to hold their Bitcoin on the exchange. So the Bitcoin are held in these exchange wallets. 10% held by miners. This includes 1 million coins, which are Satoshis, which have never been moved or sold and may be lost forever, especially if Satoshi is no longer alive. 56% held by non-whale hodlers. They can basically, using Glassnode data, you can look at what Bitcoin has moved recently, what is not moved, and you can get an idea of who are the hodlers. You can also take a look at the size. So 56% non-whale hodlers. We'll talk about what a whale size might be in a minute. 21% whales and custody providers. Custody providers, this would be the large institutional custody providers as well. Over time, Bitcoin ownership actually has begun to spread out. The little guys, so whales are obviously the big holders of Bitcoin who have thousands of Bitcoin. Little guys increasing, shrimps and crabs, anyone who has less than 10 Bitcoin. Also, Bitcoin held on exchanges is increasing as newbies come into the space and buy Bitcoin and just leave it on the exchange, which is not a safe way to store your Bitcoin. I prefer to store it in a multi-sig solution using hardware wallets. The big guys decreasing. octopus or larger, basically referring to whales. Anyone who owns, I guess an octopus would be anyone who owns more than 10 Bitcoin. Whales I generally consider to own thousands of Bitcoins. So there are a lot of misleading articles out there now, and a lot of them are just meant to separate you from your Bitcoin. Keep that in mind. There's always been the FUD about China and how many miners are in China. New data is showing, and I'll link to this article, that a lot of the miners are now moving to Scandinavia, which currently has fairly low cost of electricity and doesn't have the government interference problems that China has been having. Right now, according to this article, the estimate is that China's share of Bitcoin mining has dropped, of the hash rate in terms of Bitcoin hash rate, has dropped from, call it 65% to below 50%. And if you look at the US and Canada, they're quickly catching up together. They control the US and Canadian Bitcoin miners control more than 20% of the hash rate. So this is all trending in the right direction. And it's really not that difficult to move Bitcoin mining. You can basically just unplug your machine and move it. You can sell your machine and buy a machine in a different country, etc. It's not like moving a gold mine. These are boxes that you can move around the globe. Also, a lot of FUD about the government banning Bitcoin. I've covered this extensively. I think this really explains how a Bitcoin ban would work. But this is just not something that's going to happen. When you look at the elites in the US, we have, there's probably no one higher up in terms of their influence over the last 40 years than someone like former Secretary Treasury Larry Summers, with this whole Harvard connection, etc. He said in a recent interview, I think Bitcoin is here to stay. I don't think the whole thing is going to collapse. People are going to move towards it. The finiteness of its supply is going to raise prices. So this is not what you get when a government is about to ban Bitcoin. Another interesting article, which I'll link to here, an interview with NYDIG's CEO. This is a financial services company that specializes in Bitcoin, and he says that the big institutions they're talking to are only interested in Bitcoin, not even interested in Ethereum. But he's talked to, he said 100 out of the 100 last conversations I've had with investors that are going to allocate over $50 million, 100% of those conversations have been about Bitcoin, and 0% have been about any other crypto asset, whether it's XRP, which is junk, or Ethereum. So keep this in mind if you want to get ahead of the big institutional money flows. This is where the money is going to be floating and flowing. Finally, wanted to talk just a little bit, a reminder here on MLK Day, Bitcoin is freedom. This was a great podcast with Russell Okung that you can listen to. We got a reminder about what the government can do to your bank account, even in America. This New Jersey gym owner stayed open in defiance of the lockdown. Now, I'm not sure that's the smartest thing to do. I really don't want to go to his gym in the middle of coronavirus. That being said, for the state to seize his bank account and empty it is really, really beyond the pale. If this gym owner had been storing his wealth in Bitcoin, it would have been unseizable. This would never have happened. And what they seized the account he's using to pay his lawyers to defend himself. This is the direction that governments are trending. And so to the extent you can store your money in the Bitcoin bank, the most secure bank in the cloud, you are immune from this sort of thing. You're also immune from other sorts of confiscation. Interesting article here about UBS. We've talked about negative interest rates in Europe. Here is UBS announcing 5 days ago that anyone with a balance in excess of about $280,000, 250,000 Swiss franc, will have to pay a negative interest rate. They'll have to pay 0.75% a year. So if you have $1 million in that account and you just want to keep it safe, you will have to pay $75,000 a year just to keep your money in the bank. This is the end of the fiat system. This is how the fiat system comes to an end or breaks or transitions, because You can say, well, this just affects rich people. There are countries in Europe we've talked about where the balances are much lower, maybe it's $25,000, etc. But the point is, this is money that someone has already paid taxes on, and this is just another form of wealth confiscation that's completely outrageous and will backfire. This will drive savers from these banks to more decentralized or more secure solutions like Bitcoin, where there are never negative interest rates charged. You might be worried about Bitcoin crashing, but if you hold your money in an account that's losing 0.75% a year in terms of fees, and you're also your currency is also being devalued, maybe the Swiss franc's not being devalued quite as quickly as the US dollar, but let's say the Swiss franc's losing 5, 6, 7% in terms of purchasing power every year, that is a recipe for losing 50% of your money in 10 years. As a result, people will continue to flee into Bitcoin, into stocks, into real estate, into countries also that have positive interest rates. Hope you all have a good MLK day, especially my American viewers. Wanted to recommend this book, which I just downloaded, and I plan on reading today, Bitcoin in Black America. I've noticed Isaiah Jackson has been sort of making the podcast rounds. Seems like a smart guy, and this book looks very interesting. Keep in mind, Bitcoin is freedom. Bitcoin is the bank that doesn't discriminate against anyone based on race, national origin, credit history, political views, exercise of free speech, etc. And this is what makes Bitcoin such an amazing asset that can provide freedom to everyone, everywhere in the world, anyone who has an internet connection. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.